Hello and welcome to an Securities Market Insights. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Now on the cards for this insight tutorial video, we're going to be talking about oil and what's really gone on with OPEC recently. So the first thing that we're going to have a look through is what actually is OPEC. So OPEC is really in the name, the Organization of Petroleum Exporting Countries, and their mission is to coordinate, unify the petroleum policies of its member countries and to ensure the stabilization of oil markets. Long story short, this organization aims to modify and change the values of price on oil across the globe. We find that they are a massive organization. They've all gotten together to try and help their own economies and to promote the sale of oil at a price that is going to be most valuable to them. So, who is OPEC really being? Now, these countries here that you can see on the screen are OPEC themselves. They're the ones that are member nations of them. And sometimes these countries fall in and out. They may decide they don't want to be a part of OPEC anymore, and other times they join up as well. Now, there is another category of OPEC alliances, and these alliances you'll quite often find the OPEC symbol with a plus sign next to it. And that relates to these people. So what's it all really about? Well, in instances like Russia, they don't want to be a part of OPEC, but they want to be involved in what OPEC does. So you've got a smaller number of countries that are in an alliance with OPEC themselves, and they attend all the OPEC meetings as well. And they discuss, put forward their own claims, and they try and mediate between what they're going to do with production and the prices of oil. Now, naturally, supply and demand price takes effect on the price of oil dramatically. So if we look at oil, then we cut the production of oil, then that's naturally going to drive prices up because the less you have being produced and the same amount of being used, then you're going to see that number go up. If it's the other way around and you've got a flood of oil in the market, but no one's really buying anywhere near as much, then we see the prices start to fall because there's an oversupply of what's available. Now, the allies and the other OPEC countries that are involved, you have Russia being the largest. So the other ones that are in there don't really get as much play, they don't get as much effect. Countries like the US are not a part of OPEC, but they are still a massive reason as to why OPEC exists. They're trying to combat and work in competition with one another to the value of oil prices. So how much oil do they really control? Now, if the US is one of the largest numbers on the planet who produces and exports oil in this modern day and age through the use of fracking, we have OPEC currently with all of the countries combined doing 79.4% according to the current estimates. So that's most of the world's global supply, if not almost all of it. So when we consider what the percentage is and how much influence they really have on oil itself and the price of oil, when these guys get together and they try and change prices or cut production or increase production, we can see how easily they can actually influence where prices go. So their meetings are absolutely critical to what goes on to WTI and Brent. Now, when we consider about oil as itself and how much it actually costs to produce oil, it makes a massive difference because some of these countries spend more money producing the oil than what others do. So in the instance of Saudi Arabia, it costs them about $8 to $9 per barrel, and that's in US dollar. Now, if we go ahead and we look at what the UK can do it with, it's $44 a barrel. And at some stages in the US, it was much more expensive for them to be able to do it. Back in the 2014 era, where we had oil price wars going on then, it was because we were trying to price out the US of being able to do their fracking method where they get between shale and they get all the oil out in between those layers in the rock. In this instance, it was quite expensive back then for them to do it, and they have dramatically reduced that cost right down to the $24 per barrel mark. Back in 2014, it was past $50 a barrel. So what happens in that instance? If you rise the price of oil above what the US can make it, then that's obviously going to give them a profit, and it reduces the amount that OPEC nations are actually going to get in profit themselves. So they're trying to combat at constant. It is a massive competition between who is going to come out on top and whose oil is going to sell more around the globe. When we think about the US at $24 per barrel now, then If OPEC and the current price of oil was to devalue beyond that $24 mark, we'd start seeing oil refineries in the US and of course the drilling rigs and the fracking rigs all be unable to produce oil at a competitive price, and therefore, and very likely, the US will end up becoming, from instead of being an exporter of oil, they'll become a purchaser of oil. So this is very, very dramatic for what is going to happen in the future when it comes to oil prices, especially in today's event around oil that we've seen in the last week. We can imagine and start to see why these sort of prices do matter and how it's going to affect a global economy. So what's really happened in this OPEC meeting over the weekend? Well, the long and short of it really is that OPEC alliance members have had a disagreement. And it's really been between Saudi Arabia and Russia. And Saudi Arabia is the big member in OPEC. They are the one that produce the most oil and can do it for the cheapest amount of money. So in order for them, they wanted to increase the price of oil across the board so that they could then get more profits out of it, and they had their own expectations that with coronavirus impacts and a variety of other economic events that are going around the world, that the demand for oil is going to drop because without as much things being built or manufacturing occurring, then you likely are going to end up with that whole supply chain coming down in value, and therefore the demand of oil will also be less. So if you cut the amount of oil being produced, the demand will hopefully rise and the value of oil will also rise. Now, what was being stated was that Saudi Arabia was really trying to be a bit of a bully in this instance. They were trying to get the other member states to do to what they wanted to have happen and help them make price rise by cutting the manufacturing of oil. Now, Russia didn't agree with this because if you increase the value of oil, then the US also benefits. And that is really the basis for their argument as to why they don't want to do it. So flat out, Russia basically refused, a little argument has occurred, and instead of doing it that way that could have happened, where cuts could have occurred and you could have seen price rise, Saudi Arabia kind of tried to teach a lesson to everyone. And it's gone, well, we can afford to go the cheapest, so if you're not going to do to what we want, then we'll just price everyone out of the market. So now they've slashed the prices of oil entirely, and they are going to flood the market with as much oil as they physically can before the taps run out. So what's going to happen next is the next piece that we're going to have. What's the fallout potential really going to be? Well, if you consider it as an oil shock, which is realistically what it is, then the next aspect is national budget declines for petrostates. So Venezuela, Iran, and any other country that is really what you would consider a petro-nation, where they make most of their money out of the sale and export of oil, are going to have issues, because if they can't afford to make the oil as well and they can't contribute to the global supply of oil, then they're going to run out of money very quickly. And that's going to affect the rest of their GDP, it's going to affect their economy, and then eventually that's going to affect their politics, because if the people aren't getting their supplement out of oil-based value, then how are they going to be able to continue running the country in that sort of manner? So you're going to get political turmoil occurring. And that's why this makes oil almost always very, very political. The next step that we look at is that the US, now once upon a time, the US bought all their oil. Pre-1991, they were purchasing most of their oil. The reason we had a price war in 2014 was because of the fracking and the technology evolving that allowed them to continually reduce the price of oil. And the only reason that they entered the market was because oil prices got so high that the US decided they could do it themselves. And now they've become a major exporter. So they have barrels upon barrels upon barrels of oil stored in their country. In fact, so much so that they've even got container ships with oil being stored in the middle of the ocean. So from that sort of a perspective, once they run out of that oil, if the price is so low that they can't afford to go back to producing more oil, then we're going to see a decline in their ability to actually make that oil naturally. We're going to see a decline in the amount of oil rigs available on hand, and naturally we're going to see people losing their jobs. But the next aspect of that is that they're going to have to revert to buying oil again. And it's going to swap them from being that exporter to a purchaser. Now, that is going to be a major thing in the days coming ahead. So I do expect that, where we see oil prices move in the next few weeks, and for that matter, in the future ever, whenever you guys see anything about oil and what's going on with OPEC, I want you to take note and think about some of the stuff that I've said to you today. Now, that's all I'm really going to talk about on oil today. I'm not going to give you any updates on what's happened at the moment because I'd like this to be an opportunity for you guys to do some reading yourself. If you have any questions or you would like some reference points to start with, feel free to send me an email at talktoal@acy.com. And of course, like and subscribe the video so I can get more great insights to you in the future. Have a good trading day ahead.